Meta is buying Moltbook, and it's crazy because I swear they already owned a social media platform for bots. Thanks to Kale for that joke. But more on that in a second. Welcome to Cryptocurrents, a weekly podcast of people working crypto, fintechs, and blockchain, actually talking about crypto, blockchain, fintech, everything you need to know to be better and move your money smarter. Think of us like Master Chief, except we're coming in here and defending you from the flood of crypto nonsense influencers. I'm your host, Vince, and today I'm joined by Katya from the Mew team
Hey.
and our resident degen, Kale,
What's up? What's up?
who that intro on Halo was for. But thank you for the joke. I loved that joke.
Yeah, man.
But we'll talk about Meta and this acquisition in a little bit. I kind of want to start things off with TradFi. So there's a lot of talk about SpaceX IPOing. They are kind of allegedly slated for, a June IPO as like the first trillion-dollar company to IPO, I believe it is. Just right out the gate, $1 trillion. And it's interesting because a lot of S&P investors are going to already have exposure to this because of the way the S&P just updated a satellite company that owns a 2.8% stake in SpaceX is going to give a lot of exposure to this if and when it IPOs. So I kind of just want to talk generally with you guys about SpaceX and kind of this investing and what are your thoughts about this kind of exposure for quote unquote the normies of the world with the S&P. Kale, kick us off.
I just want to interject and just make a little correction in the sense that so the update to the S&P is going to happen on March 23rd. So, I mean, nothing should interfere with it, but that's when it's happening, March 23rd.
I didn't even see that update.
Yeah, and the other thing is that this EchoStar company has an agreement to get the shares from SpaceX, but doesn't have them yet because SpaceX was paying them for whatever satellite, whatever they were buying from them in shares.
Yeah.
And so once that goes through and they haven't set the date, then they will own 2.8%.
Yeah.
So all of this is tentative, like nothing should go wrong because this is usual, but it hasn't happened yet. But if it does, it would be like a very unusual thing to happen. I just wanted to bring that
up. So like technically there is a small chance that like
it doesn't happen.
Yeah. What are these guys called? EchoStar? There's a chance that they don't even end up with the SpaceX shares.
There is.
Will.
They probably will.
They absolutely will. Like the last thing you want with an IPOing company is like a legal battle over like the shares that you owe a company that you were like changing shares for, services from.
True. They're not just going
to especially now that it will be in the S&P 500, so there's much more visibility to it.
For sure.
Yeah.
I mean, and it's funny. Oh, go ahead, Kale.
Is EchoStar, you can invest in EchoStar right now?
Yes, that's correct. It's a publicly traded company.
Okay, that's cool. What were you going to say, Vince?
I was going to say, yeah, and also they could just be like, okay, SpaceX, give us our shares and we're turning off these satellites. Good luck navigating.
Oh, true. I forgot they have that partnership.
Yeah.
Yeah, I mean, dude, for anybody who's like spent any time in the trenches, you know that like 3%, owning 3% of an asset is not a little bit. Like 3%, it sound like on paper, it doesn't sound like a lot, but it's a lot of control.
And especially it's a $1 trillion asset.
Yeah. So, I mean, and like for the normies of the world, like you ask them about investing in stocks, people who are like aren't super financially literate, the first stocks that people mention are Apple, Tesla, and Google. And so like these are like seemingly the main stocks that people want exposure to because they're like, oh yeah, like these companies grow and they return money, return on investment, blah, blah, blah. And so especially after seeing what Tesla has done over the past couple of years as far as price action, it doesn't surprise me that everyone is like super eager to try to get their hands on SpaceX, any exposure into SpaceX.
Yeah.
So yeah, this makes sense to me. I'm kind of curious. I may or may not throw some money at it.
I'm intrigued to kind of see like how the broader market, reacts to this when it IPOs, just because, typically there's not a lot of exposure, for these outside people, these outside companies for a company like this. Like there's a non-zero chance that I want to call them Dish Network because that's like one of their subsidiaries. They could just yeet those shares into the ether. If they don't have any lockup because they're like 3% of $1 trillion. We need that money. We want that money. And I think this could like inject a lot of volatility into the S&P 500, at least initially, just given the nature of this IPO. It's going to be so very, very high profile, and it could go
Definitely.
either way. Because I really wonder how many, employee shares there are out in the world, how those are being locked up, if at all.
How much of how much is 3% of 1 trillion? Is that 30 billion?
I believe
I think so.
so.
Because 300 billion would be 30%, right?
Gonna make me do math while I'm trying to talk.
You're not
But yeah,
doing math, you're typing.
I know why I know. That's because I'm Googling it.
Just-
Yeah, so it's 30 billion.
Yeah,
30
I mean
billion,
that's
correct.
just crazy.
Yeah.
Yeah, not a
So,
small,
and,
not a small chunk of change. You know, what's interesting is like it makes you think. So I looked it up and I did not know how often the S&P rebalances or the QQQ, like the Nasdaq 100 rebalances. And apparently it's quarterly.
yeah.
It may not
Mm.
change every time, but and then there's like yearly something like a full kind of, so it happens pretty often, it seems like, to make sure that they're, still tracking the top 500 or the top 100 companies. And it's interesting to think about because on one hand, it's like the most like the safest, the most vanilla sort of thing to invest. Like if you don't know anything about the market, then that's what you're going to start with probably. But at the same time, it's kind of like, if you want to be really savvy about it, which most people are not going to want to, but if you do, you kind of want to know what's going on with every company in the basket, which is a lot of companies, and who has potential interest in what other companies, and it's kind of like an infinite rabbit hole of going down and figuring out what the dependencies and contingencies of all these are, which is part of like what happened and is happening with the AI problem right now, is that they are all so interdependent and there are all these contingencies that you have to think about whether they are buying stuff from each other and invested into each other. So I think just the indices, which I believe is the correct form of
That's correct.
index,
Yeah.
indices are kind of a really interesting vehicle, and they're more in the spotlight now, I feel like, because ETFs are such a trendy thing now and are becoming more visible, partially thanks to crypto, I think, in some ways. And when we start thinking about ETFs and what they can represent and like what the very wide range of things that they can represent, ETFs, it makes you kind of rethink these very, very old, very established in index ETFs and kind of what makes up the index and what you're actually exposed to in there. And the reason this was news is that apparently it's unusual for like such a huge private company to be infused into a public company that is in the S&P 500. But I think given how traditional finance is evolving with crypto, with being infused with all these things, I think that those kinds of things are going to start happening more.
Yeah.
Where this vanilla, sort of very safe investment is not maybe necessarily so vanilla anymore because of all these things happening inside it.
Yeah, I agree. And I do feel like, we spoke last week about Robinhood's new venture fund, which successfully IPO'd, but did drop on day one.
Yeah, 11%, I think.
11%, yeah. But yeah, I do think we are moving towards a retail interest in investing in private companies and startups. Because that's also like at the end of the day, that's what the ICO boom was, right? ICOs were
True.
only people investing in startups and the promise of, ecosystem or whatever. And I do think there is still a healthy appetite from retail investors, at least on the bleeding edge. We'll see how retail investors react if and when the S&P starts getting quite volatile because of things like this.
Yeah.
I mean, I feel like this trend is only going to continue. Like just the state of the economy, the global economy today, like people are becoming more and more comfortable risking, like risking
Yeah.
more to grow
I
capital.
mean, you said asymmetric returns like last month, and now it's just part of my daily vernacular now. I
Yeah, dude.
love like asymmetric bets, asymmetric returns. I'm like, oh, I love this.
Yeah, it's breaking into the lexicon.
I know. So speaking of the S&P, let's talk about perps and prediction markets because they are turning their bloodshot eyes now upon the S&P. Kalshi and Polymarket are introducing S&P prediction markets, and the CFTC is committed to launching a true perpetual futures in the U.S. in the next few weeks. I'll let you start us off, Katya, because I feel like we all know my rant, but I want to hear myself rant again, but I want to hear you talk first.
Yeah, I mean the S&P and even the Nasdaq prediction markets are up. I looked today on both on Kalshi and on Polymarket, and there are a bunch. Like there's one. What is it going to close at today? At the end of the month, like it's not just one. There's a few in there.
While you're
And
talking, I'm looking. I haven't looked in Robinhood to see if they've rolled out any. So keep going, please.
yeah, maybe so. Yeah, so it's just the beginning for sure. Like they started with the basics with the S&P and with Nasdaq. So here's the thing, though: the traditional market has options and futures, right? And so people are like, well, we have a thing for that. But one of the arguments is that it is much easier to do the prediction markets and kind of simpler to understand because it's just like, will it close over this number or under this number?
Yep.
That's it.
Yeah.
Over, under, yes or no. And you can take multiple positions, but they're all yes or no, very binary, just whatever. You don't choose a window. You don't have to figure out all the things that I don't know how to use options and futures. So I would have to, if I wanted to look into that, I would really have to look into that. The prediction market is clear even to me. I'm like, okay, yeah, do I think it's going to be over or under? That's it, end of story. Apparently, there's also a limit on like how much one bet, one contract can profit with options and futures, and there's no limits in prediction markets. So there's just basically there's more complexity to the traditional market instruments than there is to the prediction markets. I am also, my opinion about prediction markets, that it is the harbinger of the end of the world. But I could see the appeal to a retail user who is not very savvy or educated about markets and to use this. And kind of a similar thing with perpetual futures, crypto perpetual futures, like the CFTC together with the SEC, when they made this announcement, they were there together saying how the US is not happy with perpetual futures being all offshore because of the lack of regulation. They want to bring it back. They want to bring it in. They want to, so crypto perpetual futures. But I'm guessing if you make it available in the US, and then you have tokenized stock, then you can potentially have perpetual futures with regular stock, except it's tokenized. I don't know the answer to that because, as I mentioned, I'm not very savvy with market tools. But, and I think it's just, there is an argument there to be made that it is more accessible to the retail user because it's a little bit of a more like gamified, gambly type of interface.
Yeah.
And so it's almost like it's easier to get someone into the gaming than into like high finance. And so I think there is an argument to be made there. There is a point there. So I don't know if Kale agrees because he is the degen among us.
I didn't even I've never thought of it like that, but I resonate with that for sure. It feels close to the truth. Like gamifying the experience for sure is like making it more appealing to people who might not have like even looked at it before.
Yeah, you actually kind of convinced me that this is like a stepping ground to learning options, right? Because I looked in Robinhood to see what they're, they don't have like the daily ones, but they have like bands where it's like, will the S&P end the year in this band? But yeah, you're right. Like a simple, like, is it going to end positive or negative today? The next step is like, cool, how positive, how negative? And then that gets into options territory and kind of leveraged trading.
And I've seen kind of experts weigh in and say that honestly, for like big players, the only big hurdle with prediction markets is that the liquidity is not that deep yet.
Yep.
Like if you're gonna get like institutional players doing this, then they need a much deeper, bigger market to be there. But it's probably just a matter of time. So they're not against it per se. Like it's suitable, it's whatever. It suits the institutional players as long as the liquidity is there to support and kind of so it's, the end of the world is nigh.
That's funny. I never even considered that like there is liquidity issues with prediction markets.
Big time.
But it's like how much liquidity do these guys need? Like are there actually banks, like huge banking institutions that are like
Well, this
putting
is
$1
what I'm
million
saying.
on a
They're like
prediction market?
they're like if it's in the US, if it's all regulated and if there's like they're like fine, they're going to get in on it.
Yeah,
I mean I guess it makes sense. Like wherever the opportunity is to make money.
One of my favorite podcasts, The Risk of Ruin, which is an amazing podcast about gamblers and investing, did a great interview with the guy that was on the other side of the Kamala versus Trump trade on Polymarket. He was the one that was for Kamala, and then the whale that kind of everyone knows, the secret French whale that was for Trump. And he talked about, his history and involvement with Polymarket. And he's like, yeah, I started off in all of these like, these emerging platforms would literally just incentivize liquidity for these things. And he's like, I kind of just arbitraged my way to having a significant bankroll just by providing liquidity to which cardinal is going to be elected or, some of these obscure things, because you're right. You need that liquidity to make these things viable. And a lot of these platforms were incentivizing. I mean, we see this in crypto where you can, lock up funds to be in a liquidity pool and get rewarded.
Yeah. I'm like very familiar with the concept, just like in DeFi yield farming, but I didn't know that like it totally makes sense. But I didn't know that prediction markets are doing something similar.
Yeah. I wonder though, like, because Katya brings up a great point, like with the poly markets and whatever, they basically source the liquidity from users. I wonder why there's not kind of like, do you want to be liquidity in, the Robin Hoods of the world? Like, it's kind of interesting.
Yeah. I bet you that would do well.
Yeah.
I think it's probably in the works.
Maybe.
Katya is so not excited. We're just expediting the end of the world.
Monetize everything, Katya. It'll be great. Well, speaking of monetizing, let's talk a little bit about crypto and stablecoin linked credit cards. So Visa and Bridge are teaming up to basically offer this to 100 different markets via a SQL API, which is pretty rad, especially because I definitely dunked on Discover. What was that, a couple of weeks ago?
Yep.
Well, you dunked on MasterCard.
I know. I messed up. I'm sorry. Talk to me about this, Katya. Talk to me about this.
So yeah, I think this strikes me as one of those pieces of news that's kind of like meh on the surface and kind of but a quiet revolution sort of deal, because I've never tried to issue a credit card myself. So I don't know about the difficulties of it, but it seems that with a regular credit card, with a regular process, getting it through a new country is like a whole thing. You have to get an agreement with the bank. All of you have to get permission from the government, all of that stuff. Like you have to go through so many steps and hoops to get an already established product somewhere, but just to get it cleared for another country. And here, the reason why they highlight the single API thing, it's because stable coins are software. I mean, everything is software now, but because you can use the same API to launch in all these countries and you don't have to go through all those things. It's basically drawing on the same pool of assets and you just issue it everywhere. And that kind of global, I think this is one of the things that people who are advocates of crypto, even within the confines of like all the KYC and all the like, not the hardcore kind of decentralization crypto people, but the crypto people who are willing to be in the system, right? When they argue for the benefits of crypto, like this kind of global, borderless access and easy kind of cross global payments and all this is like one of the biggest arguments for it. And I just think that like if everybody has this card and it pays in stable coins and it draws it from your stable coin account, like even for entrepreneurs and corporations and companies, like sending money cross border and using the same credit card provider for all of their employees globally, etc. Like I think it's probably a big deal.
Yeah. No, I agree. Kale, what are your thoughts?
I mean, it's pretty cool. I feel like a little spoiled, honestly, after hearing about the Colossus Pay thing. Just because, like, if
on-chain, it's got to be on-chain.
No, exactly, dude. Like, if I had never heard of Colossus Pay, I would be all over this. I'd be like, yeah, like crypto adoption. But like, now that I know that Colossus Pay is a thing, I feel like this isn't disruptive enough. It's just like, yeah, the big suits coming into crypto, getting their way. So I don't know. I feel like I'm just kind of nitpicky about it. I want to see Colossus Pay win in the end, but like in general, I feel like the more crypto adoption, the better.
Yeah.
So I can't really hate. It's cool to see crypto taking over.
Yeah, I remembered I had a conversation, this was months ago, but one of my friends is a small entrepreneur. She has her own software service company and she employs people, contractors globally. And we talked and she's like, it's a pain to kind of figure out to pay them. There's so much like tax work. I'm paying them international. So I talked to her. I'm like, well, there's stable coins and there's USD, there's all that stuff. Like with crypto wallets, this is one of the, as I always say, like this is one of the things like of the real benefits of crypto, like if you get away from. And she was like, that is really interesting, but I didn't have like really any useful actionable information to give her. Like, they can make a wallet over there and like the infrastructure is all there for it, but her logistic questions as a company owner remain, with the taxes and with all of that stuff. And I think the closer we can get to step where like a person can have a stablecoin account, a global stablecoin account, and you just pay them from your global stablecoin account to their global stablecoin account, and then each country has its own tax structure to handle those accounts.
Yeah.
And then you just send the money to them and then say, like now it's on your side and your country knows what to do with this money that came in on our one global stablecoin platform. I think could be. Yeah.
You think programmatic money would be a thing by now?
Right.
Dude,
and
so that the promise of Ethereum?
Yeah. And that could be a really actionable thing, right? Well, like when a company, like they could be like, okay, this is what we use. This is global. This is USD, equivalent. And this is how, I'll have my tax work on my side and it works with this. And you have it on your side and it works with this, like end of story. And yeah.
Yeah, no, like for like if that scenario were to come to fruition, it's those types of things that like that's the reason why I am generally a fan of crypto adoption. Like even if it's Visa or it's MasterCard or it's like the big banks or whatever, because yeah, I feel like every little headline like this brings us closer to that reality. We're just crypto adoption.
I, at my core, really like that it's basically some smart nerds doing stuff for the banks that the banks don't really have to be involved with, right? Because I think it's funny, in my lifetime, I remember when, paying with your phone first came out and being able to tap your phone, that was crazy. And even like tap to pay, the United States is like a decade behind Europe when it comes to tap to pay and like the chips in cards. Like, these industries are very slow to move, and so I like it when their infrastructure kind of moves ahead fast. And so I like that. But you know what I don't like? It's bots on my social media. So Kale, kick us off. Talk to us about this absolute nightmare for the user.
Yeah.
Like, what's up, Katya?
I'm still confused. Is it the same guy who's OpenClaw or a different guy?
No.
Different guy. Okay.
Yeah. No, those are two separate things. OpenClaw is like a AI wrapper.
Yeah.
Moltbook
but
is a social
the
media
ones
platform.
the Moltbook bots were all like using OpenClaw, but it's
Yeah,
not
yeah,
the
yeah.
Oh,
same
for
guy.
sure.
Yeah, yeah, yeah.
Yeah. Okay.
So anyway, Moltbook, just think of it as a social media platform made for AI agents. So yeah, some guy literally just like vibe coded it, talking to Claude one weekend, telling Claude like, hey, I want to make a social media app. Help me code this, blah, 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 blah. He launched it in like 48 hours. It went viral. And then within a week, it had gone viral, like super, super viral. And then also like gone the opposite of viral. I don't know the right word, but like within a week, it went viral. And then everybody like,
Imploded.
yeah, everybody had changed their minds like not even a week later, because it came out that most of the interactions happening on this supposedly AI social media platform were literally just like dudes getting paid to talk to each other. So yeah, that is the gist of what Moltbook is. It was supposed to be a social media platform for AI agents. And it turned out it was just dudes talking to each other, pretending to be AI agents. That company, Moltbook, or that social media platform, was just acquired by Meta, which is just insane, because it's like, it means either one, that Meta has like absolutely way too much money and they have no idea like what to spend it on, and they're just throwing stuff at the wall to see what sticks. Either that or bullish Moltbook, right? Like, what is maybe Moltbook's doing something right? I don't know. Maybe it's a secret third thing, but like my biggest takeaway from this is that I want to vibe code something now. I want to vibe code something and get it acquired by Meta. Like,
Do
you can
it.
just do that. You can just vibe code a thing, and
You can't on your company computer or your company software. Make sure you're doing it on
true
your
that.
own. Definitely not a company time.
I mean, if I'm gonna get acquired for 9 figures, dude, like, fire me, honestly.
Well, we'd sue the shit out of you is what we do.
True,
we would
true.
we would actually own it.
Yeah.
So you did sign that away.
Another side note that's like funny about this whole vibe coding thing happening right now is apparently Amazon just had an emergency meeting with all of their devs.
I was gonna bring that up as well.
Of course you were, dude. So yeah, I don't know if you read this or not, Katya, but
No.
Amazon just had an emergency meeting with all of their devs because I guess one of their devs, or a few of their devs maybe, they were vibe coding things and like adding it to the Amazon infrastructure. And eventually the infrastructure like started messing up. And so they had to call in all the devs and be like, guys, don't vibe code stuff.
Well, so there's also another layer to this where previously they took all their engineers and said, you will be paid depending on how much you use AI. We want you to use AI. Go all in on AI. And now it's kind of biting
I was
them.
about to say, like, aren't all these companies actually telling you that you have to do it like a certain % of time or a certain like number of hours or whatever? And now, oh, what a
That's hilarious.
shit show.
I didn't even know that first part.
I mean, it's crazy.
Tracks.
It's crazy, like, right now in markets, like a lot of tech is down for the year because people are like, oh no, AI is powerful enough that people can just make their own SaaS software for their company. And I'm like, sure, one person employee can make this SaaS software that does this one specific thing, but they leave and then you're like, I don't remember how this works, or it breaks, or like there's no one to maintain it. Like, I still think there's a lot of world left for SaaS products. But with the Moltbook thing, I think it's very funny because obviously they knew who they wanted to sell it to immediately, right? The name says it all. And I think I could see Meta justifying this because do you remember when Meta was like, we're going to roll out AI avatars and AI influencers that you could chat with on Instagram?
Oh, yeah.
And I don't even know if that ever actually occurred.
I don't think it like left beta.
Maybe not, but I can definitely see like at the end of the day, Facebook needs engagement. Humans crave engagement on these platforms. That's the only thing that like makes them work. And if you can just spin up a bunch of bots to credibly engage, because you'll see bots on Facebook, like Facebook is riddled with bots and they engage in like horrifically stilted language, all repeating the same phrase. And it's very evident. But I mean, it just makes me think back to when Reddit first launched. Literally every staffer on Reddit had multiple accounts and was like engaging with users and like faking engagement and like conversations on Reddit to just kind of like kickstart it. And this does kind of feel like, ooh, maybe we can just have AI do that. But Katya, what are your thoughts?
So one of the things that struck me was when they, even back when Moltbook was the overnight one hit wonder, and they were saying, well, it turned out it wasn't secure. So whatever you call them, the programs that, that the AI bot would get and could log in, they weren't secure. And so humans could, just pretend to be this AI bot and interact instead of humans. And I was thinking, it feels, that obviously defeats the stated purpose of the platform. But on the other hand, it feels wrong to me if a human can't break into a bot and pretend to be, if it's so secure that you cannot break in and hack it and just be like, stop. That also doesn't feel like the goal to me either.
No, that's sketchy.
Yeah, because I understand if you create a bot and put it out there so it's doing its thing and you don't have to, it's sales or something, so that it's saving you time without having to put in those hours yourself as a human. But at any point you could go in and switch it back onto manual mode and interact and do that. Having a bot that's so secure that you can never, once you give it permission, you can never take it back again, feels like the wrong way to be.
Yeah, we're not ready for that.
No.
But maybe we are, because I remember reading a study about, I think it was Tinder or something, where they pulled up these chat logs of just bots talking to bots on Tinder, pretending to be humans. And it was just this laundry list of these just conversations going back and forth. So if it is this black box that we can't really get into as humans, who really knows what they're going to do in there? I don't think it's going to be anything productive.
We don't know. I think we don't know. That's the point. There's this book about AI came out that's called something like "If Anyone Builds It, Everyone Dies." And I wanted to look at it, and so I looked at it at the bookstore and I started leafing through it, and I was like, I don't need to read this because I am scared enough. I don't need to be convinced more. I agree. It's so I never didn't end up getting the book because I was like, yeah. Every page I was like, yeah, sure. So maybe I need to be talked down, by somebody who is more excited about it. But yeah, I think Facebook, of course, is gonna lean into the bots thing. Maybe they're trying to get out of their slump of being now branded the boomer platform, and once all the boomers die, it's gonna die. Obviously, it doesn't want that to happen, so it needs something to lift it up. Maybe this is the thing, but yeah, no, I am not looking forward to where more and more online depends on bot interaction. I am very, very against that. At the risk of being a Luddite and a boomer or anything else, I am extremely against that because I think there should always forever have to be disclosure about interacting with a bot. I think there has to always forever be guardrails on bot interaction. And I think there has to be a limit on how human-like it's allowed to be, because I don't know if I ever mentioned this on the podcast, but my education is actually in psychology, in my bachelor's. And so I feel there's great potential for mental health harm in that.
No, I completely agree. But I think the moral of the story is to just get out there and vibe code something.
100%, dude. Vibe code something yesterday. What are you doing?
Yeah. But you know what you shouldn't vibe code is your podcast selection. Thank you, dear listener, for being here. We appreciate you tuning in week over week. We'll hope you'll be here next week because we're going to read you in on a bunch more stuff that'll make you feel absolutely smarter and probably entertain you. Make sure you follow along with the podcast wherever you get your podcasts. Leave a review wherever you get your podcasts, and we'll see you next week. Thanks, everybody.